So I'm so excited to have our next guest, Mitesh Patel with Blue Sky Law. Mitesh is the founder of Blue Sky Law in Metro Atlanta, and the firm specializes in middle market business sales, acquisitions, mergers, with additional services in corporate law, taxation, employment, and real estate. So excited to have you on Profit Sense today, and welcome.
It's great to be here. Good to see you.
And so the baby boomers are exiting in droves. All business owners actually will ultimately exit their business, whether it's on their terms or not. When should a business owner start thinking about their exit, and what should they do to prepare for that exit?
Absolutely. Great question. You're going to hear different things on different timelines on that question, but I feel that 2 to 3 years out is adequate. It's a good time to start looking at your house. And I love using that analogy of a home, or sometimes even a car, but I think a home is a little bit better, right? If you're going to go sell your home, you want to make sure that it looks nice, right? That everything is working. You want the hedges trimmed. You want the interior and exterior walls painted. You want to fix all the things that are broken. And for anyone that has sold a home, that if you're going to go down that path, it takes some time to get those things in order. And I feel like a business is much more complex than that. And so do you have to do those things? No, you don't have to. But most business owners want to maximize value, which is code word for put the most money in their pocket as possible when they exit. And so if that is one of your goals, then you should start planning early, because that prep takes time. One of the other points I would make here is a lot of people go, well, just start once we are really serious about selling, and when we're about ready to put it on the market. And I think a lot of business owners don't realize that process of actually hitting the market, finding a buyer, going through the legal process, and closing can take up to a year in and of itself. So if you wait till just a year out, right when you're starting that process, you might get caught with your proverbial pants down, so to speak. And will you sell? Sure. Are you going to maximize value? Probably not.
Yeah. So I love your analogy about the house. So I have a daughter who's in the real estate business. She says, kitchens and bathrooms are what sell houses. And so to get the maximum value, I think in the business arena, certainly having a team put together to actually get a business ready for sale. And so I would hold up that the accountant and the M&A attorney play a huge role in that process.
Yeah, absolutely. I feel like a deal team, so to speak, should be comprised of, at a minimum, those two types of professionals. I also feel like a valuation expert is important. Wealth manager and planner working personally with the owner. I think that's very important. And sometimes even a standalone tax strategist. I always feel like that is somebody that needs to be part of the process. And then maybe even ultimately a trust and estates expert as well. This big slog of money is coming in, and you better be ready for it. You need to know how not to pay taxes on all of it if possible.
Right.
And again, put as much of that money safely in your pocket as possible.
Yeah, absolutely. So I want to hone in on maximizing the value. Business owners typically want to maximize the value of their business when they exit, but what does it mean to maximize value? And I guess a follow-up to that, what are the 5 main things a business owner can do to maximize the money that they do put in their pocket at exit?
Yeah, absolutely. I think that maximizing value is different for different business owners. And this is another reason why it's so important to start thinking early and planning early. And what I mean by that is that some business owners, their primary goal is to ensure that all of their employees continue to have a job. Others want to see their legacy continue and the company name to continue. But the vast majority of business owners, when we talk about maximizing value, they want to put more money in their pocket. They want to be able to see the fruits of all of their years of hard work and labor come to fruition.
Yeah, no question. We're talking to Mitesh Patel this morning, founder and principal of Blue Sky Law. Blue Sky Law is a boutique law firm focused solely on middle market, privately held companies. Blue Sky Law is armed with experienced attorneys from diverse work backgrounds, and its specialties include mergers and acquisitions, employment disputes and counseling, corporate law, business disputes, contract disputes, general litigation, and real estate transactions and disputes. Mitesh, a lot of companies are blessed with explosive growth, and they often have issues properly handling that growth. A legal audit is a tool these companies can use to ensure they are where they need to be when it comes to legal related matters on taxation, employment, contract law, and collections. So what is a legal audit, and how do you know if you need one?
So a legal audit is essentially a health checkup for a company, specifically looking at those things on the more toward the legal side of what is running a business. So we go in and we essentially start picking apart from an operational administrative side what a company has behind the scenes. So essentially we're talking about things like accounting, tax, human resources, their operations, their contracts, and we start a deep dive of going, hey, how healthy is your company? Are you in the green, the yellow, or the red when it comes to these topics? Are there areas where you should prioritize and fix things first over others? And we work solely with privately held middle market businesses. And so we have the great advantage and benefit of daily talking one-on-one with CEOs, getting a chance to see what's behind the curtain, so to speak. And we continue to see certain themes and certain issues rising to the top. But often these are things that are really not on the radar of the business owner because they are focused on running their company, maximizing, again, money, profits, etc. But really, if you're going to go sell your company, if you want it to live for the long run, you need to make sure that all these little areas are shored up. So a legal audit will give you a preview of that. And I didn't answer the previous question, those 5 areas of maximizing value when you go to sell. A legal audit is going to give you a chance to take a look at those areas and many other areas to go, hey, are we where we need to be? So on that maximizing value, do you know what the value of your company is, right? Have you had a valuation done? That's one of those 5 points. Have you taken the time to really see, can your company run without you as the CEO? I always say, fire yourself, right? If you're a business owner, if you cannot leave your business for a month, you don't really have a business. You've got a highly paid job. It could be super highly paid, right? But if you can't take that time away from your business, to enjoy life and the other things that are important for you, then you do need to question, hey, how is this thing going to keep on running if I'm not here or if somebody else steps in to buy this, right? They don't want to buy you. They might for a little while, but what they're looking for is how can I keep this thing going, for the long run? The third point, drive things to the bottom line. As business owners, we're so lucky to get a chance to manipulate things when it comes to our finances and our taxes. And I'm not talking about doing anything illegal, right? These are things that are built into the law, but they definitely benefit business owners. But some of those things cut and take away from the profitability and bottom line of a company. And when you're going to sell that company and show it to somebody else, you don't want that bottom line to look weak. You want it to look as absolutely strong as possible. And this is a little counterintuitive to the whole, again, I'm using this term lightly, but gaming the system a little bit. You really want to make sure that your company looks as strong as possible. And sometimes that does mean that, hey, you may have to cut back on some of your little personal benefits that you're taking. Fourth point, you want to make sure your products and services are really locked up, right? That they cannot be stolen from you, that your service providers on your team, your management team can't walk off scot-free with client lists, confidential information, client relationships, etc. And I would say the fifth thing, this doesn't work for everybody, but if you can figure out a way to have recurring streams of revenue within your company, that is one of the things that absolutely will maximize the value of your company when you go to sell it. Buyers love knowing that, hey, when I buy this thing, these companies are going to stick around because they have signed up for some sort of subscription, etc. In the absence of that, not every business can have recurring streams of revenue subscription models. So in the absence of that, make sure you have contracts in place. I'm absolutely shocked at how many big companies. I met with a local Southeastern company. They do about $25 million a year in revenue. And they said, hey, we don't have any contracts. And this was as we were talking about, hey, we're going to go and sell our business. And I said, why would anyone coming in that's going to pay, I think the market value of this company is probably $40 million. Why would anybody pay $40 million for your company if they don't know with some certainty that the business you have is going to be transferable to them. And they said, we've been doing this for a long time. I was like, your word doesn't mean anything when their board of directors, investors, and bank is forking out this kind of money. I was like, some pitiful kind of contract is better than no contract. So anyway, those are 5 quick points, maybe the top 5 that we often see that we recommend for clients to try to implement if they can.
Yeah. It's such great advice. As you were mentioning those, the concept of bulletproof came to mind. I can see how the legal audit that you provide in that deep dive and the 5 things that you mentioned are really helping business owners make their business bulletproof, because you and I both know that when those sharks come in to try to buy the business, they're attempting to look for any possible way they can get the value down. And so having that, whether you call it financial, getting your house in order, whether it's from a legal standpoint or a human resource standpoint or financial standpoint, just all absolutely critical items.
Absolutely.
So I want to switch the topic to manufacturing. I know you have a lot of manufacturing and assembly companies in the Southeast and Georgia. What is the single most overlooked tactic or strategy these companies are missing?
Yeah, I've been in manufacturing most of my professional career. Previous to law, as a financial analyst for a international multi-billion dollar, they were about a $50 billion automotive parts manufacturing company. So I got the benefit of being on the inside and watching it. And now in my legal career, I've been doing this for a couple of decades. The vast majority of our clients are in that industrial manufacturing space. I would say that the number one thing I see them overlooking are the great number of tax credits and deductions that are available for them. And I think this is for a few reasons. Most of those tax credits and deductions, if you get a chance to talk with politicians behind the scenes, they love manufacturing. It is part of America. It's part of what made us who we are as a country. Economically speaking, it employs a lot of people. You're talking about a lot of people, a lot of products, big buildings. And a lot of these things are generally in rural areas, right? So they can attract labor, and these credits and deductions are created really for manufacturing. Now, do they apply to other businesses? Of course. And are there different ones that apply to service businesses, things like that? Sure. But when you pull these things and look at them, the vast majority seem to be geared towards these. And I'm always surprised at how little business owners in those fields are aware of the things that they can implement with little or no cost to bring taxes down. And a great example, right there, there's a federal structure called the IC DISC, and we won't go too deep into it, but this was created by Congress, and that little structure, which is all done on paper, you don't have to hire anybody or do anything fancy like that. It will give manufacturers that export their goods, so if you have export revenue, an approximately 20 to 30% tax break on their exported revenue that they produce. And I am always blown away at how few companies utilize that. And that's just one example of many things. So if you're in the state of Georgia, go to the Georgia Department of Revenue. They've got an entire page of almost 30 credits and deductions that are available. Oh, wow. If you're in another state, and I would say probably 40% of our business is outside of the state of Georgia, most states, if you go to their Department of Revenue or Department of Taxation, there's going to be a page on how do you save money. I would actually recommend that you work with your financial planner on those, not with your CPA. CPAs are awesome, and they can handle a number of these things, but a lot of these require proactive planning. And we find that financial planners are much more forward thinking. CPAs, generally, it's just by the nature of their job, are often looking at what we have now and what was done in the past year. They're both great, I would say, right? I don't want to discount one over the other, but pull those things, take them to your advisor and say, hey, do any of these things apply to me? And I think you'd be surprised at your ability to save some money.
Yeah. Just excellent comments. We're talking today with Mitesh Patel, founder and principal of Blue Sky Law. Blue Sky's attorneys have decades of combined experience in handling legal, business-related matters for their corporate clients, which matters include buying and selling of businesses, creating partnership agreements and contracts, and buying and selling commercial real estate. Mitesh, it is so important for a business owner to have what I'm going to call a board of advisors, which certainly includes the right attorney. And so really what I'd like to focus on is finding the right attorney for your company is absolutely critical. How should a business owner go about finding, interviewing, and hiring a mergers and acquisitions attorney?
Yeah, that's a great question. So law is now very much like medicine and many other areas. It is super specialized. It's very complex, and the United States has been operating. It's a capitalist economy. We've got a couple of hundred years of built up case law and statutes, etc. But I always feel like you should first really look at who you are, what is your business personality like, etc. Also ask friends, and most business owners hang out with other business owners. Find out who they have had good experiences with and interview. I would say that once you find a few business mergers and acquisitions attorneys, you should try to find some that fit with your personality. And that comes about by talking with a few of them, right? It's hard to judge whether you like somebody unless you've got something to compare it against. So interview a few. Let them know that you're interviewing around. That's okay. Ask them the hard questions. Push them a little bit. And again, work your network. Try to find out who does your CPA, your financial planner, your fractional CFO, who do they like? Who have their clients had good experiences with? I do think that there's also some matching that needs to be done based on the size of the company and their revenues and the type of firm. So don't ignore that. And it's okay to ask about fees and size of firm. Legal services are not inexpensive. So knowing that going into it, and everybody knows that, right? They always talk about how expensive legal services are, and it's true. So knowing that, you want to get the most out of it that you can. So do not be shy about that. And just a quick Google search too will show you, hey, what are some unique and interesting questions that I should be asking of my corporate attorney or my mergers and acquisitions attorney?
Yeah. I'm going to go out on a limb here and say that we have some business owners listening to this podcast that are thinking about either buying or selling a business. So I want to ask you if what you have said today has resonated with them. What's the best way for them to get in touch with you?
Yeah, thank you, Bill. So they can go to our website, which is blueskylaw.com. So www.blueskylaw.com. On our website, we have all of our contact information. I believe that my email is on there. You're more than welcome to email me directly, but we also have administrators that can help if you want to reach out to them. You can also find us on Facebook and LinkedIn.
Great. Mitesh, thanks so much for coming on Profit Sense today.
Thanks for having me.
Financial planner versus business exit planner. What's the difference and why you need both? I want to talk a little bit about this. Imagine you're the proud owner of a thriving business. You've spent years building it up from scratch, late nights, early mornings, and more coffee than any human should consume. Now, as you're starting to think about the next chapter, you realize there's more to this story than just putting your feet up on a tropical beach. Enter the financial planner and the business exit planner, two professionals who play very different roles in your entrepreneurial saga. Your financial planner is like Dr. Watson, Sherlock Holmes' sidekick, steady, reliable, and keeping everything in order while you solve the mysteries of your business. But when it's time for a big complex sale like selling your business, you bring in the business exit planner, the Sherlock Holmes of the operation, to crack the case and get you the best deal. Here's some positives and drawbacks for each. The financial planner, they see the big picture and all aspects of your financial life, not just the business. They help with your personal goals, everything from retirement to that dream vacation. And they're with you for the long haul, adjusting your plan as life changes. However, while they're great with personal finance, they may not be as sharp on the business side. They have a wide range of knowledge and skills, but they may lack depth in complex areas like business exits. The business exit planner. They know the ins and outs of selling a business, can maximize its value. They have focused expertise, meaning they're laser focused on your exit strategy and help keep you from leaving money on the table. They help you craft a plan tailored specifically to your business, timing, and goals. On the flip side, they have a more narrow scope, meaning they're all about the business exit and less about your overall financial health. Lastly, timing is key. A business exit planner is useful when you're ready to exit, but not much help before that. It's all about knowing when to call in the right expert. Your financial planner is essential for keeping your financial house in order throughout your business journey, but when it's time to sell, the business exit planner ensures you leave on top. In our story, using both advisors meant the business owner didn't just retire to that tropical beach, they bought it. If you want to keep up with the latest in pro-business news, follow us on LinkedIn and Instagram at The Profitability Coach. If you want to listen to the past or future Profit Sense episodes, you can find us on ProfitSenseRadio.com. This is Profit Sense with Bill McDermot signing off. Make it a great day.